This is Craig Haugard with your Financial Issues Ag update for March 2nd. Well, corn went backwards for the third consecutive session as it dropped 8 to 9 cents on Monday. The funds were sellers of 15,000 contracts during the session. Now, market bears point to the fact that China has been absent from the U.S. market lately, and that, coupled with rumors of the African swine fever potentially reducing feed usage in China, brought out the sellers yesterday. The USDA Weekly Export Inspections Report brought some positive news. It showed nearly a 3-year high of 64.4 million bushels of corn for export shipment in the week ending February 25th. Now, marketing year corn export assignments to date are nearly 40% of the USDA's target. Weekly corn shipments just need to average 58.7 million bushels through August 31st to hit the USDA's annual export projection. Of importance to farmers is the spring crop insurance guarantees, which were set in the month of February. For corn this year, they will be $4.58 per bushel. Now, that's 70 cents per bushel higher than last year's spring guarantee, and it's the highest spring guarantee that we've had for corn since 2014. Beans had a crazy day yesterday. In the overnight session, they rallied 18 cents on drier Argentinian weather and the slow harvest story coming out of Brazil. Once we got into the day session, however, they reversed course and ended up 13 cents lower. Selling was generated by larger Brazilian harvest estimates. Weekly export inspections came in at 32.3 million bushels, with 12.3 million of those heading to China. Exporters have already shipped 88% of the USDA's target for the current year, meaning that shipments so far have exceeded the seasonal pace needed to hit the USDA's target by 342 million bushels. Now, the USDA can't raise its export target without raising imports or cutting crush, or both. I anticipate that's what we'll see happen in the months that lie ahead. The spring crop insurance guarantee for soybeans is now set at $11.87 per bushel. That's an increase of $2.70 a bushel over last year. This is the highest spring guarantee that we've seen for soybeans since 2013. Improving weather and poor export inspections had wheat on its heels yesterday. Weekly export inspections came in at 10 million bushels, which was below the low end of trade expectations. Market year-to-date loadings now trail last year by 28.6 million bushels, with the USDA continuing to project that we'll see a year-over-year increase of wheat exports. After a couple of rough sessions, cotton futures rebounded and turned in a strong performance yesterday. At the close, May futures were up 274 points as they settled at 91.57. Livestock futures were mixed. We had the April live cattle futures $1.02.5 lower at the close, while April feeder cattle were down $1.45 at the closing bell. Spot lean hog futures were a bit stronger. In fact, we had the April futures finished the session 57.5 cents higher. Class 3 milk futures traded in a very narrow range and then ended up closing mid-range. At the close, we had March futures 10 points lower, settling at 16.12. Meat cutout values were all lower on Monday. Choice box beef was down $1.50, closing at $239.03. Select boxes were $2.09 lower, as they settled at $227.64. Pork carcass cutout values finished $1.47 lower, ending the day at $92.37 per hundredweight. This has been Craig Haugard with your Financial Issues Ag update. We'll be right back with more financial issues after this.